What's good, traders? Welcome to a market outlook. Welcome to this market analysis, guys. We're going to be reviewing this week, Monday, March 23rd through Friday, March 27th. So I got the calendar out here. You guys can look to see what news that you got to pay attention to. Now, depending on what you're trading is really going to matter of what you should pay attention to. So you guys can see here, we have a lot of EU news, well, Euro news, pound news, and then we have some USD news that I'm going to be probably focusing on Tuesday. And we have a lot of odd news. So if you're trading AUD, USD, or any of those Forex pairs, you got to pay attention to that. That's going to be during the Asian session. And then later on in the week, we don't have that much news. We have unemployment claims. We have pound news here on Wednesday for CPI. That's going to be important for those of you trading during London session. This is going to be important for me for trading NQ and the Nasdaq, the USD pairs as well. And then pound again, retail sales. So not that much crazy news, but we do have CPI for the pound and for the Australian dollar here on that Tuesday and that Wednesday. So that's going to be the majority of like the most important thing. Flash services are usually pretty cool. They're pretty chill. Not expecting anything crazy from that. All right, so we're gonna jump right into the charts, guys. I'm just gonna do a basic outlook for you guys and just giving you guys my idea on the charts and where we're most likely to go this week and what we're most likely potentially to do. A lot of people's been asking for the weekly outlooks again, been asking for my bias, especially on some of the majors as well, since you guys know I've been really focused on trading the Nasdaq. So yeah, so I'm going to start with the Nasdaq first since it's right here in my face. And then I am going to cover the majors for you guys and talk about my idea on those. All right. So for those of you trading the Nasdaq or trading the S&P, NAS 100, you guys know it as well. It's really the same thing, but consider NQ since I'm trading it on the futures contracts. All right. Now, let's see here. So the main thing I pay attention to when I'm looking at the Nasdaq, guys, is really just liquidity and the liquidity points that we have. So right now, I'm not going to give you guys too much of a deep analysis since I need the market to really open. But one thing I will say is we are very in a bearish market cycle. Okay, we're kind of just pushing lower. You guys see we tried here to accumulate. We failed. We ended up redistributing. We didn't even get like a manipulation up here to really give a proper redistribution, but that just goes to show you how strong that this current order flow is. Now, I do believe that we will make our way back up here. We have a lot of liquidity up here, and this is the second thing I really want you guys to focus on is liquidity right here. We have these highs, and all of these stacked highs up here is creating that trend line that you guys know. Boom. So we have a big trend line here, which is basically just low resistance liquidity. So right here is going to be a major area for the market to come into since there's a lot of resting orders above these highs, especially since we didn't get that manipulation before we continued our distribution towards the downside. So there's just a lot of resting orders up here. So that's what I'm going to expect the market to get to. Now, this might happen this week. This might happen next week, but I do believe once we start seeing a change in order flow down here, this is not enough yet for a change in order flow. We do see that we are invalidating this bearish gap right here, which is good, but that's a first sign. But now we need to see like a retracement and us actually maintain this rejection. If we can maintain this, then most likely we're going to get a halt right here at this high. This is an internal high inside of another gap. So the market is going to most likely react from here. The reason why I'm saying that is because I'm actually going to be looking at this area here as my next area, probably tomorrow. This is going to be like my main liquidity point that I'm going to be focused on, because most likely we will get some type of rejection here in a retracement. So depending on what we do here is really going to determine whether or not we're going to have enough strength to push over here. Because guys, if we come in here and we reject and we start trending back lower, we're most likely just going to continue down. But if we come in here and let's say we reject and we maintain and we're able to reaccumulate here, we're able to accumulate right there and continue this bullish order flow, then we'll most likely take out this high and the remaining highs up here. Okay, so that is a basic overview for you guys here that are trading NQ with me. I'm not going to get too deep into it until I see some more price action. The market is not open yet. It's early in the morning. We have like 4 or 5 hours before the market opens, guys. So until I see what Asian session does and what London session does, I can't really give you guys like a very detailed explanation. Right now on the higher time frame, the main thing that I see is we have a lot of liquidity here, and we've been trending to the downside. There's really not much more liquidity to take down here, especially you see to the left. This is a brand new contract, so we'll most likely have to go to NQ1 to see what price action we have to the left. But honestly, guys, I'm want to see us really start accumulating and start, you know, kind of taking out some of the price action that we left over. Okay, so that is NQ. Now I'm gonna jump right into the Forex pairs because, guys, ES and NQ are really the same thing. They have slight divergences, but you look at the price action, you can kind of tell they're really the same. And as you can see here, ES really has the same stacked liquidity and the kind of the same price action. So when I'm trading, I look at both of these pairs, well, both of these indexes, both of these contracts, because I want to see sometimes where we have slight divergence, and it'll tell me which one is stronger than the other. Kind of gives you some clues on you know, what pair is leading, and that helps me execute some of my trades. That's a major thing that I look for. You can see that's really one of my rules is smart money divergence. It's SMT, but yeah, smart money divergence between these two correlating assets right here. Yeah, so those are the main two things that I even look at. So there's really no reason for us to go into anything else here when it comes to the Nasdaq. All right, now let's get into the majors. I know a lot of you want to see that. So we're going to get into the majors. Like I told you guys, it's going to be a simple breakdown. We're not going to go too deep into things, guys. Let's get in there. All right, let's go to DXY. Okay. I'm going to go to the daily time frame. I haven't looked at these in a while, but you can see the analysis that I have still stands here. So we can see here, I drew this fibs, and let me make this bigger for you guys too, man. All right, so this fibs right here that you guys are seeing, the 70% and this 81% right here is being drawn from this low to this high. So this is one big push towards the upside, and that's where the fibs is being drawn from. Now, you guys see that the market has made its way down here, had this big redistribution, and now we're coming into here. We have made our way into that 70% pocket. Okay, and we are creating a nice accumulation. All right, for those of you that knows accumulation distribution, I still use that in my analysis. It's just more of a mental thing now. It's not a technical analysis for me anymore. I mainly use it for directional bias and just understanding what the market is doing. So right now, what do we have? We have here our primary support. We have our selling climax. We have our automatic rally. We have our secondary test. We have our upthrust action. We have our secondary test in phase B. We have another upthrust action right here. So this is basically a sign of strength. And then we have, what do we call that? Our spring. All right. Nothing has changed, guys. We still have the same accumulation schematics printing out. It's all there. Okay. So we have our major spring towards the downside right here. And we have another sign of strength, which is good. Next thing I want to see is this spring actually maintain. I know this looks like a whole bunch of BS. For those of you that doesn't even know accumulation and distribution, I know it looks like a whole bunch of letters and writing, a whole bunch of different coding. All right, but we have our spring. Basically, this is just a manipulation of our range. Now, what we need to see is the market maintain that spring. So most likely what we'll probably do is come back into the 50%. We could see a stretch back into the 50% right here. Another way you could do this here is drawing it out until the sign of strength. So this could also be right here. Another pullback. So basically, I'm expecting us to at least pull back down here, and then for us to continue higher, taking out this high and rebalancing this move. Okay. That's all we know for now. All we know is that this accumulation is going to most likely give us a push higher into this gray area here, which is most likely a big imbalance. If we look at it, let's go on the weekly time frame. So we still have majority of this weekly imbalance right here. I see that the market filled majority of this weekly imbalance. So the max that I'll see this take us up to is at least up here. If this accumulation plays out very smooth, most likely what I want to see is another reaccumulation and us come into here. Now, once we come into here, we could possibly start a distribution phase, get a redistribution, come back into here before we continue higher. Or if this area of imbalance is enough orders and we don't have enough buyers trying to take this market higher, we can most likely just continue lower. Okay, now that is going to most likely take months. All right, do not worry about that. I'm just giving you guys an overall view of what you could expect. Now, for you lower time frame traders, or for those of you that are trading intraday, the first thing that I would look for here on the dollar index is expect the dollar index to most likely range right here. We could continue going higher from here, but usually in our schematics, we like to see a pullback into the spring, especially since this is a large spring. I want to see a pullback into the spring. So expect the dollar to originally get a little bit weaker, and then for us to try to get stronger over time as we go away from this accumulation, because this is a lot of orders being built here. Whether this plays out towards the upside or to the downside, once we leave this range, wherever we go, we're going to trend in that direction for a little bit, because this is a lot of orders being placed. Okay, so just keep that in mind. First thing I would look for, guys, is look to see if we're actually going to get a pullback or if we're actually going to reaccumulate here. And just let's zoom into the lower time frame. Let's see what we're doing. Okay, so you can see the market is already showing us like reaccumulations right here. This is buyers getting into the market right here. So boom. All right, let's say if you wanted to know whether the market is going to actually give us that substantial pullback or not, here's your first case right here. So off of this reaccumulation right here, here's our leg off of that reaccumulation. From this low to this high creates that leg from this reaccumulation. Okay, boom. And now we are where? Into the 50%, and we even tapped into the 70% pocket and the 81 pocket. So now what we want to see is we need to see if this market can actually hold this. All right, if we hold here and you guys see that we potentially create some type of accumulation, some type of buyer's interest in here to go higher, then we can expect that, and we can expect the market to just keep reaccumulating. But guys, if we see we still have bearish pressure, especially right here, look at the trend going down here, down, up, down. So we're making lower lows and lower highs. All right, and you can see here tapping off of the 71, we don't have an accumulation schematic. We just basically have the market reacting. So what we could see is one more push to the downside underneath this low. We do have liquidity here being that session lows. We could see a manipulation of those session lows down here before we start seeing a reaccumulation. But for right now, it looks like we are pushing through this area, not really respecting it like how we want to. We're getting a reaction. Just because we see a reaction doesn't mean we're going to trade away from here. Okay, just keep that in mind. All right. So that's basically what I'm looking at right now on lower time frame. Watch this area for potential longs. Do not force it. I would wait for us to at least get a manipulation of these two lows, or at least another reaccumulation on the lower time frame, since we do have this huge bearish push right now. Okay. All right. So that is for you guys. And the reason why we look at DXY is to understand EU, GU, and the USD pairs. Okay, so if you're trading any USD pairs, you need to be paying attention to the DXY. It's basically telling you when the dollar is stronger, when the dollar is weak. And honestly, I need to be paying attention to it more often, because that actually correlates too with the indices and the Nasdaq. But that's an overview of the DXY for you guys right there. Now let's go into EU. We're going to cover just the majors. And we're going to cover the majors, and I'm just going to keep it kind of simple. We're going to do the same thing. We're going to do a mainly overview. I don't want to go too deep into it, guys. So we're going to start here on a daily time frame. Now, the last time I looked at EU on the daily time frame was right here. We had this area right here. This was a demand zone. We see the market played off of this demand zone. We came back lower. I don't know if we played off this demand zone. We missed it. We missed this demand zone, but we reacted off of the imbalance that was sitting in here. We reacted off of the imbalance that was sitting in here. Let's see if our leg continued. Boom. We came into the pocket. Look how the market is respecting these pockets, guys. And then we push back to the upside, right? Now, this time, look what we have. Boom. Completely invalidated this. So this bullish structure is now over. Now, this looks like a very clear distribution. For those of you that know, this looks like a very clear distribution right here, right? And guys, remember, EU and DXY are literally flipped over, right? Look how this is an accumulation. Look at this manipulation. Now look how this is a distribution. Look at this distribution, right? We have the same thing. We have all of our drives. We have 1, 2, 3 drives. And now we have what? A break with a sign of weakness. Well, that is a ugly line. A break with a sign of weakness, right? So now I'm going to be expecting the same thing that I just told you guys. Based off of this big manipulation on the daily time frame, what am I expecting? I'm going to look to see if we can make it back into this 50%. This right here is going to be the minimum to expect potential sellers, okay? If you're going to go down to the lower time frame, I would wait until we get into here. All right? Now, on the super lower time frames, we still have the bearish market cycle, okay? What do we see? We see the market comes up here, we manipulate these highs, another ugly line. We manipulate these highs, we create this distribution right here, we go lower. This distribution currently is holding our order flow between this. So now we have from that high, which is a structure high, to this low, okay? So what do? We come back into the pocket, we're rejecting the pocket. What I need to happen here, guys, if you want to sell the market here, we need to manipulate these highs and get a distribution here. It's very crucial. If we do not get a distribution here, look at the current trend. We are currently respecting this order flow going higher. Now, I don't really mind. Let me go back. I think I deleted what I want to delete it. All right, TradingView. Okay, guys, I don't really mind. I don't really mind this rejection right here. The problem with this rejection is we rejected, but we're not getting any displacement. And basically, guys, we're not seeing violent selling pressure as we're rejecting. Okay, we just kind of just tap this area and then we're just kind of just pushing away. We're not really saying, hey, we want to sell from here. We're saying, hey, we need to just react here for a little bit. It looks like it's an exhaustion zone, not really a reversal that's happening right here. That's why I want to see the actual manipulation with a displacement move that shows actual sellers. Because right now, guys, all we're doing is we went higher, tapped into this area. Market said, okay, let's go ahead and just exhaust orders. Let's reject a little bit, give these people a chance to get their orders filled before we start placing more orders. That's why I believe that we can come higher into the 50% unless we see some type of manipulation with a impulsive move to the downside. Once you see that, guys, if we get something like this where we come up here, we manipulate these highs and we break this low, then I would be more inclined to expect EU to continue selling off. Okay. All right. So that's EU. Pretty simple. And if we do sell off, this is going to be your target, this low right here. Because we are building nice liquidity underneath here too. So that's EU. Now let's go into GU. All right. All right. Now GU is a little bit behind. GU is still maintaining its daily structure on the higher time frame. So I haven't looked at this in a while, but I see that we did trade into this daily imbalance here and we respected it. We trade into this daily imbalance here and then we respected it. So this is a major daily low. Honestly, right here, this is a major daily low. This is a major push. On GU, this looks like a reaccumulation. Okay, this is a valid reaccumulation. Now understand that if EU continues going lower, GU is going to follow at some point because the DXY, guys. So that's why it was important to look at the DXY first. If the DXY does print this accumulation and we continue distributing, eventually GU will break this low. Okay. Eventually we will break that low because of the strength of the dollar. If the strength of the dollar increases, it's basically like simple trading 101, guys. If you trade Forex, you understand that the dollar is the opposite of the pound. So if the dollar is increasing in value, the pound is technically decreasing. So the market will decrease. Okay. The market will go down. That's just simple economics. Okay. So looking at just the technical price action though, what are we seeing? We're seeing a huge push from this low to this high, right? Let's just look at the technical price action on GU from this low to this high. And look, the market comes where? Into the pocket. This is why I taught you guys the fibs. This is why I tell you guys to make sure you're drawing your legs and you're understanding where discount and premium pricing. These are things that I still use, guys. Nothing has changed. The markets has not changed. We've been doing this for years now. Okay. It's the same thing. All right. Now, the thing is here, guys, the reason why I believe that GU will fall a little bit more is let's look at order flow. Okay. And this is why I still look at accumulations and distributions, but on a directional time frame. Now, for those of you that understand, you know, this is a pretty clear reaccumulation on a higher time frame, right? Very clean. We have a distribution right here that creates a what? That creates an overall distribution, right? This distribution plays out, and look at the market down here. I don't even have to zoom in, but you can already see at the end of this potential distribution cycle, we create a reaccumulation. So we're just going inside of this here. What do we see, guys? Accumulation, reaccumulation, right? This is like literally textbook bullish market cycle. Okay. So what does that mean? That means there was a lot of buyers here, a lot of orders getting filled here. The reason why we know that is because we have distribution schematic, accumulation schematic, distribution schematic here, distribution schematic here, accumulation schematic here, accumulation schematic here, reaccumulation schematic. So who do you think won in this? Buyers. Buyers were stronger. So this whole entire thing is simply just one huge reaccumulation. Okay, that's all you have to look at it as, just one huge reaccumulation. It was a little fight between some sellers taking some profit orders, and then buyers came in and took the market higher. And look how much higher we took it. Now, that's not the point. The point here, guys, if we have these orders going back and forth here and buyers end up winning and we see the market is trending, we see the market tries to react off of this area, it bounces and we fail. What does that mean? That means that right now sellers are currently in control. So even though we are coming down and we are coming into this retracement and we are in the pocket and we are expecting buyers to get here, we still don't have proof that buyers are here, because where we wanted the buyers to be inside of this zone, buyers failed, right? So that means that we need to reintroduce new, stronger buyers, which it looks like that's what we're doing, because this is setting up a range right here. We have our official selling climax right here, and we have a whole bunch of secondary tests, but I don't see a spring yet, guys. Selling climax, we have a lot of secondary tests. This is our secondary test in phase B. I don't see a spring, right? So I'm expecting us one more move to the downside into the 80%. And if this does not produce that spring, that manipulation that we need, and a push above one of these highs, at least this high, if we don't ultimately get above this high, I believe that we will still continue lower and take out this low. Okay, just being honest. The reason why I say that is because even though we created this low right here, and yes, we created a potential upthrust action, but after the STMB, we didn't get a sign of strength. Which, what is that telling me? Basic market structure. High, low, high, low, high, low. We're creating lower lows and lower highs, guys. So we're still technically bearish. All right. That's what I see here on GU so far. So just going into the lower time frame here, looking at some supply and demand zones, I see here that London highs up here took out Asian. We're reacting inside of this gap. I like this area right here. I would zoom in into this area. We have a nice imbalance. The market is pushing. We invalidated this imbalance. We have London lows and we have more liquidity. And since I'm expecting one more manipulation, I would look into this area here. So I would set an alert here. Once the market gets into here, I would look on the lower time frame for a proper distribution or some type of way that whatever strategy you guys use to get entered into the market, whether it's a distribution schematic, whether you're looking for a break of structure on the lower time frame, whatever it is, this is the area I would look for that to see if we actually see sellers, because that'll be an easy trade to the downside in targeting these lows right here. Okay. And that's only if the market wants to continue lower. Now, if the market does this and we break this high, that's a clear sign that we're respecting this area. So now that makes it even much easier for you, because all we have to do now is go back to the higher time frame. Well, if the market is breaking order flow here on the lower time frame, we already know where we're at, so we're just gonna follow the order flow. It's not that hard, guys. All right. So that's GU. Now let's go to GJ here. I know a lot of people wanted to see these, so that's why I'm here, guys. I'm gonna try to do these more consistently this month and next month, just in general. Let's see here. So you can see the last time I looked at GJ was all the way down here, which is crazy. So much price action have passed by. I don't really know what to tell you guys about GJ, guys. This looks just like it's ripping towards the upside. We have a distribution right here, though. That was our first sign right here. But we're pushing past these bearish imbalances. So it looks like this is going to be a reaccumulation. I'll just be honest. Let's look at this on the lower time frame. Yeah, it is right there. All right, so far, accumulation, reaccumulation, and so we have buyers, right? We have buyers in control of this market so far. And just looking at let's look at our current structure points. We have low, high, low, high, low. Okay. Boom. Let's zoom in. What are we respecting? We have an accumulation here on the lower time frame. We respected it barely. It looks like we took out that low. Yes, we did. We manipulated this low right here slightly. We manipulated both those lows, and now we've been pushing higher. Okay, I actually like that, because after we manipulated this low, we broke this high right here. So I do think GJ is going to continue higher. Right now, the most obvious target would be this London high, and then it's going to be this external high to the left. Okay, now for you to take an entry here, guys, we already manipulated that low. Let's go even lower. Let's see. No. Your best entry would have literally have been down here underneath this low. That would have been something. But right now, the reason why I say that is because if we draw our fibs from this low to right here, you can see we tap right into the 50%. So this is a great entry area because, one, you're in the 50%. So this is a good area to look for buys, and you're underneath liquidity. So the market is manipulating. So I'm pretty sure there's some type of accumulation inside of here that you could have taken. All right. So that would have been the best entry. That would have been the best point of entry. Now, right now, what I would wait for is the market to actually create that distribution, breaking this high. And then what you'll look for is a potential distribution up here, another retracement before we take out this high. That's if you're lucky, right? I'm just going on the lower time frame. We could just rip up here, guys. But you're going to do the same thing. You're going to wait for the market to actually show a distribution first. The reason why you want to see that distribution is because you don't want to get caught before this happens. Because if you're buying them, if the market's going higher and you're just buying it, and then that distribution starts forming, you're going to take unnecessary losses. So that's why when I was trading Wyckoff, when I was using it technically, like as technical entries, I would wait for this distribution first, because once the market starts trending like this, there's going to be some type of take profit orders. There's going to be some type of selling getting into the market, even if it doesn't reverse us. So once you see that distribution, and then you see that means sellers have tried to get into the market. So once we get that distribution and we know that, okay, sellers are trying to get into the market, now all we need to do, guys, is wait for the buyers to invalidate those sellers. And now we're okay with taking more aggressive buy entries because we know the seller attempt has already happened. And now we're part of a reaccumulation. So we're part of a reaccumulation. We're part of the volume that is taking out the sellers, and we're not anticipating the sellers to be taken out. You get what I'm saying? So that's why it's important to wait for that distribution, or at least a retracement, before you start aggressively buying at highs and lows. So if you don't get the entry on the retracement or in the right area, you have to wait for the market to create another area for you guys. Okay. Let's see here. USD CAD still looks ugly. Not surprised. I'm not surprised. I'm not really going to get too deep into this one, guys. Yeah. I never liked USD CAD that much, honestly, because of this right here. So I'm just going to leave it alone. We're going to go to USJPY and gold, and then we're going to just finish at gold. All right. So USDJPY is still bullish. I'm not surprised. Very bullish, honestly. We held this low, put higher. I'm going to just go to the most recent price action here. Kind of cover that for you guys. High, low, holding this low. Reaccumulation right here. My drawings. Reaccumulation right here, reaccumulation right here, accumulation right here. Price comes into this accumulation. We tap into it, we respect it. Okay, what have we been doing since then? See that? Tap into that right here. Boom. Look at that major push. So now what I'm going to expect, guys, retracement and another accumulation. Where would you like to see that another accumulation? Literally right here. I think there should be a better thing in here. It's probably like a 2 hour. I'd go with the 1 hour. I'd go with this whole area right here. Honestly, this imbalance right here underneath this. Boom. This is going to be your demand zone right there. So that is going to be your optimal area. But you guys know how the markets work. The markets don't like giving optimal entries. So this would be your yellow zone. So once the market gets into this area, start paying attention, see if you see anything clean, and see if you can take something out of here. Okay. Because most likely we can just come in here, take out this intermediate low and continue going. Right. But right here would be like your precision area. This is where I would focus in a little bit more. If we invalidate this, then we're most likely invalidating order flow, because you see the market is respecting these bullish imbalances right here, respecting bullish imbalances. The reason why this here is not getting treated as an area than this is because here we actually have the market going lower. So if I zoom into this, I know this is a reaccumulation. Okay. So that's why this area is just more important. We have more price action. That means we have more orders that are potentially getting filled here than here. This looks like a reaction out of this area because orders were already getting placed into here. Okay. So what we want to see is these low level buyers get taken out, liquidity being swept, and then basically for the same thing that happened here, right inside this area for us to push higher. And the only reason why is because we are respecting this current order flow going towards the upside. Okay. I know we have like a big push to the downside. This big push only scares me if the reversal is not as much. But you guys can see, even though we have this big violent push, once we got into this accumulation, we have a violent reaction off of it. So that's why this is not worrying me as much. Okay. If the market was reacting here and we were just chopping like this, that was a whole different story, guys. All right. So I believe that there's enough buyers to continue taking this, especially if DXY continues our strength. You guys see how now DXY ties into everything as well. All right, so let's go into gold. Let's talk about gold. So gold has been breaking records. When I look at gold, guys, I look at institutional price points. So I know we reached a 5,000 price point, and right here, 5,000, 5,500 is the next area. I think that's where we tapped off into. Yeah. So this is going to be a liquidity point right here for gold. I would watch gold once we get here. This is where we're coming to next, okay? Which is literally right there. So underneath this low is where I'm going to expect any type of buying pressure to come into gold. Anywhere in between here, I know that is a big area, so let's zoom into that. Let's be more specific. Where specifically? If I had to give you a specific area, right here. And coincidentally, that lines up with our institutional price point. So if I give you a good buying area for gold, right here, okay? Near the 4,000 area. I do believe we will manipulate these lows right here, and we could see a pullback into this price action to rebalance before we get another push down here. The main thing, guys, is I want to see the market slow down as we come in here. I do not want to see this violent push continue into here. We want to see the market actually start slowing down, especially on the higher time frame, guys. I'm on the 4-hour time frame. So if we're seeing 4-hour bearish candles just coming into here, most likely we're going to rip through this area. But I want to see the 4 hours start giving me rejection candles, you know, little rejection candles, boom, 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 boom. So we can actually start seeing buyers accumulate their way here. Okay. So that is my overview on gold as well. All right. So thank you guys for watching this market analysis. If you did, thank you for watching this market outlook. I will see you guys next week in the next one. I'll see you guys in the Discord as well. I'm sending a lot of my daily bias on NQ, and I'm going to be sharing a lot more of my day trading trades. A lot of people have been asking that for as well. So I'm going to be sending a lot of those as well. Appreciate you guys. The ones for you that was asking for these market outlooks, and especially like with the Forex, I got you. All right. So I will see you guys in the next one. Peace out. I hope you guys enjoyed it.